Hey traders, welcome back to my weekly index market review. It was NFP week, so we had another big week with key US data driving volatility. In this breakdown, I'll show you how these macro drivers shape price action in the indices using ICT concepts, focusing on liquidity runs, displacements, and how the Fed narrative is shifting. Monday was, of course, Labor Day, and the market consolidated as a result. And Tuesday and Wednesday, as expected in anticipation of NFP, we traded between both bullish and bearish higher time frame PD arrays. However, Tuesday's manufacturing PMI remained in its consecutive month in contraction. And in terms of price action, we had an internal range to an external range movement during Silver Bullet, with NQ sufficiently taking out sell side liquidity, giving us a bullish divergence moving into the PM session. Here, we also created the low of the week as the manipulation concluded. On Wednesday, the morning market rallied following the weaker than expected JOLTS data. Again, another internal to external movement from this discount to this high before retracing back into OTE for the PM session. On Thursday, services PMI showed expansion. Private payrolls came in well below expectations, so hiring momentum is slowing, and initial jobless claims rose to 237,000, signaling a softer labor market, which reinforces expectations that the Fed may move toward rate cuts, which would provide a bullish impulse for the indices. And bullish it was after the raid on sell stops during the AM session. This initial manipulation allowed smart money to buy from a deep discount level before having the largest expansion of the week, with the S&P 500 creating yet another all-time high. And with that came NFP Friday. NFP data which surprised sharply to the downside, so stock indices initially jumped on dovish cues, but the rally soon gave way to caution due to concerns over long-term growth impacts, potentially signaling a weaker underlying economy. And in terms of ICT concepts, well, open low, high close. This meant after our huge expansion on Thursday, price retraced back internally from a high premium. So this was a great TGIF setup. However, the market gave very little chance for an entry during the AM session. And that wraps up this week's review. We saw how the US data drove the market, but as always, for us as traders, the key is not just the headlines, but how the market reacts around liquidity pools and structural levels. So as always, keep an eye on where price is engineered to move to next, not just the why. And that's it from me. Thanks for tuning in. I'll catch you next week for another breakdown.